Can your finances stay steady if the economy shifts tomorrow? In uncertain times, prices rise, jobs feel less secure, bills become heavier, and small mistakes can create big stress. But financial stability is not about predicting everything perfectly. It is about preparing before pressure arrives. When you know your numbers, control spending, build cash savings, manage debt, protect your income, and stay calm with investments, you become harder to shake. The economy may feel unstable, but your personal money system can still feel steady. In this video, we will explore how to create financial stability during economic uncertainty. These steps can help you feel more prepared, more confident, and less stressed when life becomes unpredictable. Let's get started. 1. Know your numbers and cut waste. The first step to financial stability is knowing where your money is really going. During uncertain times, guessing is dangerous. You may feel that bills are high and money is tight, but you need clear numbers to make smart decisions. Look at your last 3 months of bank statements, credit card statements, and payment apps. Separate your spending into 2 groups, essentials and extras. Essentials are things you must pay for, like housing, basic groceries, utilities, transport, insurance, and minimum debt payments. Extras are things like dining out, subscriptions, shopping, delivery apps, entertainment, and upgrades. Once you see these groups clearly, you can find quick savings. This step also shows which expenses are helping your life and which ones are only creating pressure. Pause and use subscriptions, reduce restaurant spending, limit delivery orders, and avoid major non-essential purchases for a while. This does not mean removing all joy. It means protecting your money from leaks. Even one small cut can give you more breathing room during a difficult month. These small changes can also help you build cash faster without feeling overwhelmed. When you know your numbers, you stop reacting with fear and start making choices with control. That control is the first sign of real financial stability. 2. Create a survival budget. A normal budget is useful, but during uncertain times, you also need a survival budget. This is the lowest amount of money you need to get through 1 month if income drops or stops. It is not your comfortable lifestyle. It is your emergency version of life. Your survival budget should include only true basics: housing, basic groceries, utilities, transport, insurance, and minimum debt payments. Remove restaurants, shopping, travel, subscriptions, and lifestyle upgrades. The goal is to know your minimum monthly cost before a crisis happens. This number gives you power. If your normal spending is $3,500, but your survival budget is $2,200, you now know how much money you need to stay stable in a difficult month. You can also use this number to build your emergency fund. It helps you make quick decisions instead of panicking under pressure. A survival budget reduces panic because you already know what to cut, what protect, and what must be paid first. 3. Build a cash buffer. In uncertain times, cash is protection. It may not feel exciting, but it gives you options when life becomes difficult. Without cash, even a small emergency can push you toward credit cards or loans. That is why building an emergency buffer should be a priority. Start with 1 to 2 months of basic expenses based on your survival budget. This starter buffer can help with car repairs, medical costs, urgent bills, or income gaps. After that, slowly build toward 3 to 6 months of expenses. If your job is stable and your household has more than one income, 3 months may work. If your income is irregular or you support others, aim closer to 6 months. The stronger your buffer is, the less pressure you feel when unexpected costs appear. Keep this money somewhere safe and easy to access, like a savings account. Do not invest emergency cash in risky places. Its job is not fast growth. Its job is safety, access, and peace of mind when the economy feels unstable. A strong cash buffer also helps you avoid rush decisions. When you have money set aside, you can think clearly instead of borrowing quickly. It also gives you time to solve problems calmly instead of reacting from fear. In uncertain times, that extra time can be just as valuable as the money itself. 4. Manage debt defensively. Debt becomes more stressful when the economy is uncertain. If income drops or prices rise, monthly payments can feel heavier very quickly. That is why debt must be managed carefully. Start by making sure all minimum payments are paid on time. Automate them if possible, because missed payments can hurt your credit score and create extra fees. Next, list your debts with balances, minimum payments, and interest rates. High-interest debt, especially credit cards, should be handled first because it grows fast. Pay minimums on everything, then put extra money toward the debt with the highest interest rate. This method can save money over time. Also, stop using credit cards as extra income. Keep credit lines open if they help your credit profile, but avoid adding new balances for lifestyle spending. During uncertain times, debt reduction gives you breathing room. Each payment you reduce gives your budget more flexibility. The fewer payments you owe, the more flexible your budget becomes when life changes. 5. Protect your main income. Your income is one of your strongest financial tools, so protecting it matters. During economic uncertainty, do not only focus on cutting expenses, also focus on becoming more valuable at work. Keep a simple record of your results, projects solved, problems, time saved, customers helped, or improvements you made. This record can help during reviews, promotions, or difficult company decisions. Instead of saying, "I work hard," you can show clear value. Employers often notice people who solve problems, stay reliable, and help the business move forward. Also, keep your resume, portfolio, and professional profile updated. Do not wait until a job loss to prepare. Stay connected with people in your field and keep learning useful skills. This does not mean living in fear. It means staying ready. The more prepared you are, the faster you can respond if the job market changes. Income protection gives your whole financial plan more stability. 6. Create a backup income stream. Relying on one income source can feel risky during uncertain times. A single job may be stable today, but companies, industries, and markets can change. A small backup income stream can reduce that risk and give you more confidence. This does not mean you need to work all day or start a huge business. Start small with skills you already have. You could freelance, tutor, write, design, teach, consult, sell digital products, repair things, or offer a simple service. The goal is to create extra support without taking on too much risk. Avoid side hustles that need large upfront spending. In uncertain times, cash is important, so choose something low cost and practical. Even a small monthly side income can help with groceries, savings, debt payments, or emergency funds. It can also help you feel less trapped by one paycheck. A backup income stream gives you more options, and options create confidence. 7. Stay calm with long-term investments. When the economy feels uncertain, investments can rise and fall quickly. This can make people nervous, especially when they see their account value drop. But panic selling can cause serious damage. If you sell during fear, a temporary drop can become a permanent loss. If your emergency fund is strong and your basic needs are covered, try to stay calm with long-term investments. Continue investing regularly if your situation allows it. Automatic investing can help because it removes emotion from the process. You invest a fixed amount on a schedule instead of trying to guess the perfect time. Market ups and downs are normal. A long-term plan should not change every time the news sounds scary. Review your investments once a year and make sure they still match your risk level and goals. Do not check your portfolio every hour. Constant checking can increase fear and lead to emotional decisions. Stability comes from discipline, not panic. During uncertain times, calm decisions protect your future better than emotional reactions. There you have it. How to create financial stability during economic uncertainty. You cannot control the economy, inflation, layoffs, or market changes, but you can control your preparation. Start by knowing your numbers, building a survival budget, saving cash, managing debt, protecting income, creating backup income, and staying calm with investments. Choose one step today and take action before pressure gets heavier. Comment below which step you want to work on first. If this video helped you, click the like button, share it with someone who needs it, and subscribe for more simple money lessons. Thanks for watching, and I will see you again.